What is up, you guys? Nick here, back at it again with another NIO video. In this one, I want to slightly shift gears, yeah, that's a pun, and discuss a topic I'm not really seeing anywhere else on the internet, and a topic a lot of investors seem to be refusing to acknowledge. I'm not tooting my own horn, but I kind of am. I have been covering and analyzing NIO for a very long time now. I first told my subscribers to invest in the company while they were sitting at $7.34. Here's a video of me doing so, and I've personally been invested since around $3 a share. I was one of the first NIO bull position YouTubers, and I'd like to think that I have quite an extensive knowledge on their trajectory and their business operation details. A lot of investors ridiculed me for this position, declaring that they would go bankrupt. However, I don't think any of those comments aged too well. I'm starting on this note to preface that I am a NIO bull, but I do want to put forward some caution moving forward. I am extremely bullish on this company in long run, but we investors should take a moment to slow down, critically analyze this company and their lead up to Q3 earnings. I haven't shied away from discussing potentially damaging and bearish aspects of this company in past videos, and although I'll have some investors up in arms for me for this video, I have said before, I have given my promise my word that I will continue to cover and analyze companies from the most objective and unemotional stance as possible, because at the end of the day, we want to make informed and calculated investment decisions and not fall into the all too easy trap of investing through emotion. Before we get into the dirty, smash that subscribe button, I'd really appreciate it. I do a ton of videos like this going over EV stocks, tech stocks, IPOs, and focus my investment strategy on emerging disruptor companies. Decimate that like button for the YouTube algorithm, I'd really appreciate it. And without further ado, let's get right into it. So as I was previously stating, I am indeed a NIO bull. We'll continue investing in this company for months, quarters, years, and hopefully decades to come. But smart investors will also act to stretch every single one of their dollars and calculate their buying and selling appropriately. Over the past few months, an absolute feeding frenzy has taken control of the stock, and it seems like everybody and their cousins are screaming at the internet for you to buy more shares. I heard this one guy tell me NIO was a growth company coming out of Hong Kong. Kind of lulled. So be careful of who you trust online. Also do your own research. Alright, so that being said, I want to do exactly that now. Lay everything out on the table and attack this company from an objective standpoint. This is what you need to know going forward. When is the right point to buy? Here we go. NIO, over the past 6 months, is up over 1,000%. They emerged from the brink of bankruptcy last year through cash injections acting as a bailout from the Chinese government, which formed a subsidiary branch to their company that would be called NIO China. The American holding company, NIO ADR, transferred over 24.1% of the company's stake to these government officials and outsider authority investors. NIO ADR, the company that investors, Li Bin, the CEO, and the stock are exposed to, have been steadily purchasing back stake in the company through tranches at a steady rate, however are not expected to purchase back the entire company. Because of this tranche buyback, shares have been becoming increasingly concentrated, while simultaneously becoming diluted through completions of multiple additional share offerings. Diluting shares is never a great thing overall for investors, as we are essentially losing value out on the actual worth of shares. You can think of it as how $1 in 1920 would intrinsically be more valued than $1 in 2020. Dollars have been diluted as the Fed pumps more money into the market. This is the exact same thing as what's happening when NIO issues out more shares. These continued dilutions functioned perfectly as NIO had anticipated, offering them the liquid cash to survive for the meantime and to continue growing at an exponential rate. A growth company needs to do exactly that, grow, especially in the fiercely competitive electric vehicle industry that is currently exhibited in mainland China. There is no other option. Considering the Golden Week in October potentially negatively impacted NIO's deliveries in the month of October, sales are very steadily increasing, and Li Bin has acknowledged that supply chain issues have been mostly resolved moving forward. For Q3, we investors can expect a much better vehicle margin and gross margin, which should help out the share price short term. And I know what you're thinking. You're saying, well, Nick, everything you're saying sounds relatively good, so what's the big fuss? Well, actually everything is fairly good, and that's sneakily part of the issue. With so much speculation and promise already priced into the stock, I really do think that the slightest speed bump or hiccup could absolutely shutter the stock extremely negatively. The stock is becoming increasingly volatile. Their beta value is rising as more and more investors are keenly keeping an eye on it. I actually cannot believe how quickly quickly and how much exposure this stock has received, as just a few months ago, hardly anyone knew about it. Being that it is in the limelight, it is a growth stock, and it is in a rapidly emerging young industry, the electric vehicle industry, and albeit positioned in the most fierce EV geographic region of the world, China, this company is by in no means out of the woods yet, and it's important for investors to acknowledge that and the risks associated with this. It's a good practice to zoom out on the stock and take note of how quickly they have continued to double their share price time and time again. It took Tesla almost 10 years to reach similar market caps that NIO has reached in just a matter of months. So can this rapid and accelerating growth be sustained, and should you buy more shares? Although I sometimes have hated on Wall Street analysts for their delayed and bearish reactions to the NIO camp and have continued to state that they are lagging behind NIO's true potential, I don't think that's quite the case anymore. With so much attention on them, firms are really critically analyzing all things NIO, and it's worth taking stock that the highest of all Wall Street bulls are predicting sales of $5.1 billion for the calendar year of 2021, representing just north of a 100% on the predicted $2.1 billion 2020 this year, keeping in mind that this is the highest of bull analysts' target. Another 10x is extremely unlikely for this company for the very foreseeable future. They may run into supply chain issues, become less hot, some of which they have indeed already overcome, but they are currently only delivering roughly 5,000 vehicles a month. NIO outsources its entire manufacturing process through JAC, a partnership program, and lose out on some potential margins by doing this. If they run into supply chain issues yet again, and JAC is unable to keep up with the demand, many investors may run for the doors fearing slowing growth, which could shutter the stock price short term. I do think NIO needs to quickly act concerning the supply chain and outsourcing current issue they face. There is also so much hype regarding NIO's expansion into Europe markets next year, yet how will these markets emerge from the health situation? China has been largely shielded from the slowing auto sales that many other countries are experiencing currently. This is due to their strict and tightly regulated lockdown procedures they implemented earlier on this year. We are unfortunately not seeing the same in other countries, especially in the European Union, where their case count continues to surge and the economy continues to run an increasing deficit. Will this have lasting impacts on the luxury electric vehicle industry? Will consumers on average be forced into spending less on their vehicles, sacrificing luxury for affordability? NIO's operating expenses continue to be a bearish aspect of their business operation to me, as it continues to surge year over year. As they don't actually own their own operation and outsource, they aren't able to fully benefit from increasing sales as of yet, as some of their margin is paid to JAC. Their operating expenses nearly doubled from 2018 to 2019, from 5.2 billion renminbi to 9 billion renminbi, whereas their total revenue didn't even come close to this margin, just 4.9 to 7.8 billion renminbi. I am very wary of the rapid growth this company has seen over the past few months, and do think a correction could follow after a steady surge leading into their Q3 earnings. China's auto sector historically sees a bulging into the last months of the year, which should elevate their sales and should be a cherry on top for the Q3. However, moving into next year, I do fear their operation could run into severe supply chain issues. Profitability is not delivering 5,000 vehicles per month. They need to exponentially increase this number if they are to become profitable. And if they are already hitting supply strain, this does raise a point of concern for me. Although I am a long-term bull on this company, I do think that in the coming weeks or months, we may see a sharp correction after some of the heat and hype has subsided from this company, as this typically happens after such a strong surge in an emerging growth company. I in fact almost want this to happen, as it would mark a perfect buying opportunity for a bulk amount of shares to hold on to for the foreseeable future. I am indeed a bull after all in this company, don't get that wrong. I am simply exercising caution during this feeding frenzy. I do think this company will succeed long term and will continue to keep a very close eye on them. However, I am not personally buying shares above this $40 mark for the time being. I have quite a low average price as of right now, and I'm planning on purchasing another bulk amount of shares if we see prices hovering around the $35 range in the coming weeks. I do think that we will see a steady surge leading into their Q3. However, I am indeed worried of intense profit taking and a correction in the days and weeks following November 17th. I will be keeping an exceptionally close eye on this all-important time for this company in the following days and weeks, leading in and following their Q3 earnings, so make sure to hit that subscribe button. Let me know in the comments what you think. Are you buying, selling, holding, day trading? What's your play? Thanks for watching, everyone. Happy trading moving forward. Smash that like button for the YouTube algorithm. NIO to the moon as always. Cheers.